All right, ladies and gentlemen, as you can see from the breakdown of earnings this upcoming week, it is going to be a crazy one. Now, we're going to dive into this. We're going to look and break down the important earnings for this week. We're also going to talk about briefly what happened last week and why all of this is so important to our markets. This week could help literally make or break a stock market crash or a stock market rally. So that's the premise of this video. If that sounds like something you are interested in, stay tuned and hit that like button, because this information is free 99, and you can stay up to date with all of it by hitting that subscribe button and turning on that notification bell. If you guys want to take it one step further, come trade with me live in real time. We're trading some of these earnings. Link down below in the description of this video. So let's get into it, guys. First things first, let's talk about last week. Let's kind of work from last week and head into this week and wrap it up with why all of this is so important. So as you guys know, the first big data report we got was CPI. And CPI was, I want to say, mixed. It was good and bad, right? Because on one part, the headline CPI number did go down by quite a bit. The headline year-over-year number came in at 5%. You were expecting 5.2%, and last month's reading was 6%. So a 1% drop year-over-year from February until March. Now, the month-over-month number also came down to 0.1%. You're expecting 0.2%. That's 1.2% on an annualized basis. That is very good. But core inflation went up year over year from February at 5.5% to 5.6% in March. And the core inflation rate month over month came in at 0.4%, which is showing it is continuing to accelerate. So when you strip out food and energy like core does, inflation is still a very real problem. And at a 0.4% basis month over month on an annualized figure is 0.4 times 12, 4.8%. That's bad. And a lot of people are saying that inflation might be sticky around that 4% mark. A lot of people are making the argument that inflation's really not going to go under 4% anytime soon, and that it will probably take a recession to get us under 4% inflation. That's 100% higher than the Fed's target of 2% inflation. And they're not going to raise that target anytime soon. So that's not good. And this is actually the first time ever since January of 2021, before inflation was a problem, when inflation was under 2%. First time since then that core is now higher than headline CPI. So that is not a good thing. And that was probably the worst thing that happened last week. Now, at 2 p.m. on Wednesday, you did get the FOMC minutes. And now the Fed itself forecast a recession later throughout this year that will take 2 years. And they said a mild recession with a 2-year recovery. And that's also not a good thing. Now, Thursday, you got PPI, and this was the highlight of Thursday. It came in at negative 0.5%. You were expecting a 0% reading. So producer price inflation got a lot better in the last month, and you're in firm deflationary territory. So that was positive. Now, on Friday, you got retail sales, which you were expecting that to come in at negative 0.9%. It came in at negative 1%, basically on expectations, a little bit worse, but pretty well on expectations. Now, Michigan consumer sentiment, this is what the markets reacted to yesterday. That came in at 63.5%. better than the 62 number, and this is not off percents. This is just a number. Higher is better, right? Lower is worse. You were expecting 62. It came in at 63.5, so better than expectations. But what caused the markets to sell off is the inflation expectations. You were expecting a 3.5% one-year inflation expectation from consumers. That came in at 4.6%. And if you take a look at this chart, when inflation expectations on the 1 year go higher, it causes stocks to go lower. Look at this jump from September at 4.7% to 5% in October. What happened during October? Let's just refresh everyone's memories, right? This was October. And if you make these candles a little bit bigger to kind of see the extent of this, that's when you hit the low on October 13th. And this was the August rally. So inflation expectations went higher, and this happened. This was a crash from trough to peak of about 19%. And a lot of this, I would say, was based off of those inflation expectations going higher. Well, what has happened since the markets have rallied? Inflation expectations have fallen from 5% to 3.6%. That's very positive. But now look at the jump. This could be the first signs that inflation is becoming unanchored and could be a very real problem. So this was a head scratcher to a lot of people. And I think as we get into next week, as people really start to, figure out what this means for Fed policy and what this means for the markets, it's not going to be a good thing. It's not going to be interpreted as a good thing. So that's the number one most bearish thing that is currently going on right now. Now, good news is for this next upcoming week, you really don't have anything for economic data. There's really nothing. And if we take a look and see what we have, let's go ahead and do next week. For Monday, you really don't have anything literally at all. Tuesday, you don't really have anything besides building permits for March. That comes in at 8:30 in the morning. Fed Bowman that speaks at 1 p.m. That's it. Wednesday, crickets, nothing at all. The Fed Beige book does come out, which I shouldn't say that's crickets. Comes out at 2 p.m. This is basically a preview or rundown of how Fed officials are evaluating their districts, right? The Boston Fed, the Philly Fed, the Atlanta Fed, San Francisco Fed. They give you a report of basically how the economy is doing in their regions. So you can get some clarity. So that's what you got for Wednesday. For Thursday, you get the Philly Fed business conditions, right? You get the Philly Fed employment, Philly Fed new orders, Philly Fed prices paid. Not usually big news for the markets, but if anything changes, it could be. And initial jobless claims coming out at 8:30 in the morning, expecting 244,000. Another uptick from last week's number at 239,000. Fed Waller speaks at noon. And that's it. Friday, you really don't have anything. You have Fed Cook that speaks at 4:35 p.m. And that's it. You don't have any big economic data. We really got all of that last week. What the big story is going to be is earnings. Now, why this is so important is because the markets lately in 2023, okay, let me break this down a little differently. There's two reasons why the stock market rallies, and two reasons only. Either earnings are expected to go higher, and they are going higher, right? That's one reason. Or people are willing to pay more for those earnings. That is called multiple expansion. Well, in the last 3 months, the earnings expectations for Q1 have went down about 6%, and stocks have rallied. That means people are getting more comfortable paying more for those earnings. So you're actually expecting pretty bad earnings numbers, but the multiple is a lot higher. And that is because Fed policy, or projected Fed policy, of rate cuts coming and quantitative easing that's been happening in the banking crisis, a lot of, let's just call it BS reasoning for why stocks have really been rallying, if you want to break it down in that way. So that's why earnings are going to be so important. If earnings are bad, well, what business do stocks have going higher from here? Especially after the data that we got for last week does not support the Fed cutting rates literally anytime soon. Now, for Monday, before open, Charles Schwab, M&T Bank, State Street, and Quaranty Bank and Trust. After hours Monday, you get some more smaller tier banks. I don't want to go over those ones. Tuesday, pre-market, you got Bank of America, Johnson & Johnson's, Goldman Sachs, Lockheed Martin, BNY Mellon, Ericsson's, Commerzbank, and that's basically it. Tuesday, after hours, Netflix, that's going to be a big one. United, Intuitive Surgical, Western Alliance Bank Corporation. That one will also be very big in light of this banking crisis. Martin, United Community Bank, First Horizon, Metropolitan Commercial Bank, and Preferred Bank. Wednesday pre-market, Morgan Stanley, U.S. Bank Corp, Baker Hughes, Abbott, the NASDAQ, Ally, Citizens, and Synchrony. Wednesday, after hours, Tesla, IBM, Alcoa, Lam Research, Discover, Steel Dynamics, Kinder Morgan. Thursday, pre-market, TSMC, American Express, Rite Aid, AT&T, Nokia, Alaska Airlines, the Blackstone Group, Union Pacific, D.R. Horton, and Philip Morris International. Thursday and after hours, PPG, CSX, Seagate, First Financial Bank, Barclays. That's basically it. Friday pre-market, P&G, HCA Healthcare, SAP, and Independent Bank. Now, these banks are going to be important in and of themselves, but besides that, you got Johnson & Johnson's, Lockheed Martin. Those will be important for their certain sectors, right? Intuitive Surgical, important for their sectors. But for the broad markets, Bank of America, Netflix, Morgan Stanley, Tesla, IBM, Discover, American Express, TSMC, those are the ones that will really matter. If TSMC, Tesla, Netflix have bad earnings, that's going to be bad. Now, American Express and Discover are going to be important because Americans are obviously using a lot of credit card debt. And if they are spending money, that's probably going to be seen as a positive thing, right? But if consumers slow down and you're getting signs of that, that's where things can get a little negative, right? And the economy, or I should say the markets, will look at the economy like it's slowing down, that we have a problem. So this is what you have in store, guys. I think just given where we are right now, the markets have to go down. And if earnings do go down in the way that we're expecting them to, or maybe even worse, well, the markets might need to fall substantially from here. And that's the big risk. I think you should play defensive, if not have some downside protection. So that is it for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to trade some of these earnings with me live in real time every time I do make a trade, link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.